everyone, welcome to RomCom EDUSESSION. I am Rahul Mohile, Assistant Professor teaching accountancy from last 12 years. Will be teaching you all subjects related to accountancy for regular as well as self-finance courses. I will be teaching you the subject of accountancy with more concept clarity and easy to understand. So let's start today's session. Hello everyone. So today we are going to start with financial accounting for FYJC semester 5. If you see the accountancy group, we have two accountancy subjects and they are, number one is financial accounting and number second is costing. So these two subjects will carry total 200 marks in semester 5. So financial accounting will carry 100 marks and similarly costing will carry 100 marks. So today we are going to start with internal reconstruction. So what is internal reconstruction? If you see, there are 2 points in that. Number one, internal. Number second is reconstruction. Internal refers to within the organization and reconstruction refers to redrafting, reorganizing the company's financial statement in a systematic manner. So there can be one question in your mind, why we are doing internal reconstruction, why we are going to follow this step of internal reconstruction. So I'll be guiding you in detail why this internal reconstruction comes into existence. So before that, let us get very clear with the concept of internal reconstruction with a systematic example. Mr. A has a company. The name of the company is ABC Limited, and what happens with this, there are 4 consecutive years which relates with loss with the company. So the company is suffering loss in the year 2017, 2018, 2019, 2020. So this loss creates problem with the company and the company market shares also decreases. With that, Mr. A contacts to a consultant. The consultant finds out the reasons for the loss related to the company. The consultants decides what to do. For that, they demands the financial statement. Consultant saw the balance sheet which was not showing true and fair view. That indicates that basically the balance sheet which was presented was not showing true and clear picture related to the affairs of the company. If you see the balance sheet of ABC Limited, we have the liability side. On the liability side, we are having equity shares, we have preference, we have 2 secured loans, 12% debentures, 11% bank loan and 1 current liability of creditors. Similarly, we are also having on the asset side land and building, goodwill, debtors and 2 fictitious assets which is also called as accumulated losses, and that is preliminary expenses and profit and loss debit balance. If you see, this company's balance sheet is not showing the exact view, true and fair view of the company is not shown by this balance sheet because we are having the fictitious assets on the balance sheet asset side. Similarly, we are also having goodwill of rupees 6 lakhs. If the company has goodwill of 6 lakhs, how can the company earn loss related to 4 financial years as concerned? So there will be a systematic procedure follow in this, and the consultant will guide the person related to the company that this all the assets as well as liabilities of the company should be systematically write off, and for that the order of the court's permission is necessary. So accordingly, this assets writing off or redrafting or reframing of the balance sheet is nothing but the concept of internal reconstruction. So from this we can get very much clear that internal reconstruction is a corporate restructuring strategy where we are going to redraft the financial statement, reframe the financial statement in a systematic manner so that true and fair view of the company's financial statement can be revealed. So that is the point we have learned in this. Further, what is the need of internal reconstruction? Number one is final accounts is not showing the true and fair view because as the shareholders wants the clear picture of the balance sheet. So since the financial accounts is not showing true and fair view, there is a need for internal reconstruction. The asset side of the balance sheet is showing too many intangible assets, fictitious assets, as well as the liability side is also showing some liabilities which are overdue. If you have 12% debentures, if you have preference, we need to pay dividend on preference, we need to pay interest on loan. So for that, there is a problem with the company since the company is not earning profit. So that is why there is a need for internal reconstruction. Further, we will be moving towards what is the exact difference between internal reconstruction and external reconstruction. If you see, these 2 points are similar to each other. So internal reconstruction, in internal reconstruction, we are not liquidating the company. We are only writing off all the assets and liabilities. That means new company is not formed in case of internal reconstruction, but in case of external reconstruction involves concepts such as amalgamation, acquisition or purchase. In case of external reconstruction, a new company is formed. Say for example, A and B integrates their business and form a new company called as C Limited. It is called as merger, acquisition or purchase. If one company acquires the business of another company, it is called as acquisition or purchase. If two companies integrates their business together, it is called as merger. So that is the basic difference between internal reconstruction and external reconstruction. Further, we are moving towards the various methods of internal reconstruction. Number 1, alteration of share capital. So we are going to alter the share capital. There will be various concepts in this, such as consolidation and subdivision. So we'll be learning more in detail in the next videos about consolidation and subdivision. So first important method of internal reconstruction is alteration of share capital. Second is variation of shareholders' rights. So what you mean by variation of shareholders' rights? In this, if you have 11% preference shares showing on the liability side of balance sheet, we'll be providing them systematic dividend of 11%. But variation in shareholders' rights will change the rights of the shareholders, and here we are going to change the percentage of dividend which we are going to provide them. That is number 2 called as variations of shareholders' rights. Number 3 is reduction of share capital. Here we are going to reduce the share capital from the face value 10 to face value 2. For example, preference is reduced from 100 to 20. Compromise oblique arrangement. Here we are going to compromise with our creditors, with our debenture holders, with the secured liabilities in a systematic manner. Further, so step number 1 while solving questions, because theory is also important, with that practical questions how to solve, that is also important. For solving this, step number 1 is journal entries. So we need to frame the journal entries as our step number 1. Step number 2 is the capital reduction account. So this is a new concept, capital reduction. So I'll be telling you in the next slide about capital reduction. Step number 3 is nothing but the balance sheet. So these are the systematic steps which we need to follow while preparing the internal reconstruction questions in practical manner as concerned. So these are the important steps of internal reconstruction. These all steps will carry total 20 marks in your financial accounting TY BCom semester 5 examination. Further, so what is capital reduction? So capital reduction account is one kind of temporary account. It is one kind of temporary account only opened for internal reconstruction purpose. If there is any increase or any decrease in the liabilities, then we are going to pass the journal entry related to capital reduction, and any kind of increase or decrease will be transferred to this. So capital reduction represents the sacrifice basically made by all the liability holders, all the shareholders, all the creditors in a systematic manner. So all the profit which arises is transferred to capital reduction account. There is a simple rule which will be very easy for you to prepare or draft the journal entries, because most of you are finding journal entries as a big task. So if there is loss in the capital reduction, it will be debited. If there is a profit in the capital reduction, it will be credited. So how to deal with that, we will be seeing in detail in the practical questions. Further, so these are the journal entries which we need to remember while solving all the questions of this chapter. So these are the basic journal entries. If you remember all these journal entries, it will be easy for all of you to remember. If number 1, reduction in share capital. If you see, reduction in share capital is also important. Number one is equity share capital account debit to equity share capital to capital reduction. No need to by heart any entry. I will be telling you how to remember this or how to construct journal entries. Those students who are by hearting the journal entries or mugging up the journal entries, it will create a lot of problem for those students to construct the journal entries for all the chapters, because there are n number of entries which you need to remember. So number one is equity share capital account debit. Here we are going to write all the points related to old equity shares. To equity share capital, here we are going to write the new equity share, and to capital reduction, what will be the difference between this, or what is waived or what is remitted, we are going to pass over here. Reduction in preferential capital, so we are having preferential capital account debit to preferential capital to capital reduction. To preferential capital account debit, that will be old, to preferential capital, that will be new, and to capital reduction, what is the sacrifice amount, will be transferring to capital reduction systematically. Number third is settlement of debenture holders. So debenture holders are the creditors of the company, so we are going to pay them the interest also. So debenture holders account debit to debentures, if we are paying or if we are settling by way of debentures, debentures will be credited. If we are paying by cash, will be crediting the cash. If we are paying by equity shares, will be paying the equity shares in the credit side. So that is entry number third. Entry number four, settlement of creditors. So entry will be creditors account debit to bank to equity shares oblique debentures. So I have written to bank to the equity shares to debentures, but while solving the settlement relates with equity, then we will be writing equity share. The settlement relates with debentures, then we'll be writing debentures, or if it is paid by cash, then we'll be writing cash. So that is also the point. Number fifth is appreciation in the value of the assets. Appreciation results in rise in the value of the assets or increase in the value of the assets. It's very simple to remember this entry. If the value of the assets increases, the entry will be assets account debit to capital reduction. I have only written over here assets account. We will write the name of the assets such as land and building, plant and machinery, furniture, fixtures, motor vehicles, and n number of assets you all already know. So assets account debit to capital reduction. So I'll be sharing with you the simple rule for appreciation of assets. Whenever any assets increases, capital reduction account will be credited. Similarly, whenever any assets decreases, so in accountancy language, we are calling decrease in assets as depreciation in the value of the assets. So depreciation is nothing but reduction in the value of the assets. So whenever assets value decreases, capital reduction account will be debited, and similarly assets account will be credited. Point number fifth and point number sixth is very important from your exam point of view, because this too will relate with any kind of adjustment which will be asked in the paper. So appreciation of assets and depreciation of assets are very simple to remember. I repeat again, whenever there is increase in the value of assets, capital reduction is credited, and whenever there is decrease in the value of the assets, capital reduction is debited. Further, we will move towards the next point, payment of reconstruction expenses. So while following the concept of reconstruction, there are n number of expenses which takes place. So similarly, there will be simple entry for that. As we have seen, all expenses and all incomes related with the scheme should be entered in capital reduction. So the entry will be capital reduction account debit to bank. So why bank is coming over here? Because whatever we are paying through cash or through bank. That is why bank account is credited, and capital reduction account is debited since it's an expense for us. Number 8 is preference dividend arrears. So preference dividend is in arrears for 1 year, 2 year. That will be clearly given in your question. But preference dividend, if is in arrears, we are passing the simple entry as capital reduction to bank. But if preference dividend is settled by equity shares, we'll be passing the entry related to that as capital reduction account debit to equity shares. There is a very important note which I have given over here, that is if arrears is waived. So what is the meaning of waived? Waived is nothing but cancelled. Waived, remission, forego, all these words will be interrelated with the chapter of internal reconstruction. So if arrears is waived or cancelled, there will be no entry since it's a contingent liability. Contingent liability is nothing but happening or non happening of an event as concerned. So this is the preference dividend arrears paid. This is very important. And number 9 is for any asset sold. If we are selling any assets, we are receiving cash. So debit what comes in, what is coming in, cash is coming in. That's why bank account is debited and we are selling the assets, so asset is going out, so assets account is credited. So I have written a point below that if profit CR is credit, CR indicates capital reduction, and if there is loss, CR will be debited. So similarly, we will be passing the entry related to loss or profit, but the simple entry will be bank account debit to any kind of assets account. Further, so number 10 is very important entry. This is the bonus marks for all of you because we are only going to write all the amounts from the question as given in the question directly. So entry for writing of fictitious assets. What do you mean by fictitious assets? Fictitious is nothing but काल्पनिक assets. Fictitious related with accumulated losses. They are heavy expenditure which are showing on the balance sheet asset side, but actually it is not an asset. So n number of examples I have taken. So that is preliminary expenses, profit and loss debit balance, we have miscellaneous, we have share issue expenses, we have advertisement suspense account, and we also have the all intangible assets to be written off such as goodwill, patents, copyrights, trademarks. All these assets are to be written off. N number of points I have taken over here, but all these points will not be covered directly in the question. There will be 2 or 3 points given in the question. Accordingly, we'll be solving that. Simple entry we have to pass: capital reduction account debit to all kind of miscellaneous expenses and all intangible assets. And the last step is 11th point for transferring balance of capital reduction. So since we have learned already that capital reduction is a temporary account only prepared for internal reconstruction purpose, so whatever balance we are going to get in capital reduction will be transferred to a separate account called as capital reserve, and this capital reserve will be shown in the reserves and surplus heading as per the Indian Companies Act 2013, which relates with reserves and surplus. So Indian Companies Act 2013 reserves and surplus heading, we are going to write this capital reduction account debit to capital reserve. Whatever balance we are going to get over here, that will be transferred directly to reserves and surplus called as capital reserve heading. So how to calculate this? There is a simple rule to calculate, that is capital reduction credit. We have to add all the credits in the journal entries and we have to less all the debits from the journal entries. Whatever balance we are going to get, that will be transferred to capital reserve by passing this entry as capital reduction to capital reserve. That's it from this video. So we have learned in this what is internal reconstruction, what is the basics of internal reconstruction, and why there is a need for internal reconstruction with the basic journal entries, which will be very helpful for you for solving all the practical questions related to this chapter for TYBCom Semester 5 Financial Accounting. Thank you very much. We'll meet in the next lecture. Till then, bye-bye.